right, earnings season is well underway, and this is when companies give updates to investors and inform them how the last 3 months of business was. What were the revenues? What were the profits? What were the cash flows? And it's a really interesting time for investors to get an update of the outlook for the stock market. In this latest installment, Microsoft reported its first quarter fiscal year 2025 financial results after the markets closed on Wednesday, October 30th. So I'm going to share with you these results and what investors should take away from Microsoft's financial results, and also update my buy recommendation on Microsoft stock. I've had this stock rated as a buy all year long in 2024, and I'll update that recommendation following these results and let you know if I still think it's a buy.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Microsoft reported revenue of $65.6 billion for an increase of 16% year over year. That's excellent growth for a company like Microsoft and the size and scale of this business to grow revenue at 16%, especially when the company generates lucrative profit margins at 47% in the latest quarter. That means on revenue of $65.5 billion, the company generated operating income of almost $31 billion. So it's generating strong profit margins on growing revenue. Now, one of the areas that I was intensely focused on with Microsoft was the cloud business and its commercial bookings growth. And speaking first to the commercial bookings growth, that grew by an excellent 30% year over year in the first quarter. And that compares to rates of growth of just 14% in the same quarter last year. The company now has $259 billion of remaining performance obligations. These are contracts that will eventually turn into revenue, so that's a good sign. That's up from the $212 billion it had in the first quarter of 2024, but it's down from the previous quarter where it had $269 billion in RPO. That could partly explain why Microsoft's stock price was down by over 5% on the day after it announced these results. I'll highlight a couple of other numbers that has investors sending Microsoft's stock price lower today. So the company's cloud business increased by 22% year over year to $39 billion. And of course, the cloud business is very profitable at 71% operating profit margins. Gross profit margins. All right, so one of the numbers, in addition to the decreasing RPO from the previous quarter, the other number that had investors a little bit concerned about Microsoft is the capital expenditures. That came in at $20 billion in the previous quarter, $20 billion in CapEx, and that's to support their cloud and AI offerings. Of that spending, roughly half was for long-lived assets, so these are data centers optimized for AI, and cash paid for property and equipment came in at $15 billion. Now, this is great news for NVIDIA because most of this money, or I shouldn't say most, but I should say a large portion of this money goes to NVIDIA for its service in building out these data centers optimized for artificial intelligence, which include a vast variety of NVIDIA's products, including its GPUs. Still, even after all that spending, Microsoft generated cash flow from operations of $34 billion, which is up 12%. So the company's generating revenue and demand for AI is soaring, and so that's why it's spending so much on AI. I know investors are concerned when they see companies increase their CapEx by such a large magnitude, but so far the return on investments have been strong. And remember, Microsoft has a deal with OpenAI and ChatGPT, where ChatGPT's computing power is going to Microsoft. So for all of those search queries on ChatGPT and the computing power that's required to respond to customer queries, that's going to Microsoft. So Microsoft is generating the revenue. Microsoft is generating the computing power or selling the computing power to ChatGPT to train and inference that large language model. And so demand for this service for Microsoft is soaring, in part because demand from ChatGPT is increasing by so much. And then there's many other use cases that show up in the company's cloud revenue business that we saw earlier that's justifying this increase in capital expenditure. So the intelligent cloud business, which is where the company houses its artificial intelligence business, which is servers, products, and cloud services, that increased by 23%, driven by Azure and other cloud services revenue growth of 33%. So the company is showing you that the cloud business is thriving, the AI business is thriving, and that's why they're spending more on capital expenditures. And I can share with you the chart here for Azure and other cloud services revenue. You can see for the last 5 quarters, it's increased by at least 30% in each of the last 5 quarters. 31, 33, 35, 34, and 33% respectively in each of the last 5 quarters. So when you've got a business segment that's growing north of 30% and it generates such strong profit margins, over 70% gross profit margins, you're going to want to invest in that category. And as an investor, you should be happy to see that in that category. But I think investors are just concerned about the magnitude of these capital investments. It's just gotten so large so quickly that it's increased the riskiness of Microsoft's normally not very risky business model. And another area of concern for Microsoft stock investors was Windows OEM and devices revenue growth, which were just 2% in the latest quarter. This segment has stalled recently, and investors are still waiting for the rebound in the personal computer business. It's been later than expected. Most analysts had the PC industry recovering in the second half of 2024, calendar year 2024. And we haven't seen that just yet from the companies that have reported on the PC industry. We've seen very low single digits growth here in this industry. And most of the companies that have reported on this industry, they've said that this has been delayed rather than canceled. So they don't expect this recovery to not happen anymore, but what they rather expect is for this recovery to happen, just to happen a little bit later than expected, maybe 3 months later, maybe 6 months later. So following this decrease, Microsoft now is trading at close to the cheapest valuation it's traded at all year long in 2024. Is trading at a forward price to earnings of 27. And I still think the stock is undervalued. So to update my recommendation on Microsoft stock, I'll reiterate that I think this stock is a buy, and I updated this today, October 31st.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.